This week, we're talking retail prices and the jump in feeder cattle. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
Happy Friday to you as well. Coming up, we're going to talk about that retail price report. We'll talk some about this jump in feeder cattle prices, and we'll preview a busy week next week. But first, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, a positive week for us, as you've alluded to. When you look at the fed cattle side, we were about $1.10 higher this week. That was pretty light run this week in terms of fed cattle. On the feeder cattle auction side, we were anywhere from $2 to $5 higher this week on feeder steers. Futures is where we got the very nice increase this week. The June live cattle futures contract closed up $4.90, and the August feeder cattle contract closed up $9 and a nickel. July corn futures this week were down 15 3/4 cents, which I think helped those feeder cattle prices as well. On the beef side, so some good news there this week as well. Choice box beef price nearly $10 higher. Actually moved us back to where we're above last year's level by $7. On the hog side, cash barrels and gilts this week were $1.70 higher. The June lean hog futures contract was lower this week, down $1.65. We were also higher on the pork cutout value, up to $2.50 on what really was by and large strengthened bellies this week.
I think as we talk specifically on the cattle side of things, two things we have to point out. One, box beef or wholesale prices have just been solid all week long. I think that's part of this conversation. And the other one has to be, I would assume, if we haven't talked about risk management in our operations, this is a really good time to point that out as well.
Yeah, so absolutely. And I think some better news than we'd seen for a while on box beef prices this week. Lot of concern about $3 being somewhat of a resistance level in terms of those box beef prices. And we've been below for a period of time now to bounce back above this week. Maybe consumer demand is stronger than we would have thought over the last few weeks. So I think that is some good news. Let's just not forget we're at fairly high prices for all these things. We still have some clouds out there in terms of the consumer demand side of the equation. Debt, high interest rates, inflation, all those things I think have to continue to be examined as one thinks about when is it time to do some risk management. Maybe I need to go back to my old saying now that we're in baseball season where we're not trying to hit a home run, we're trying to hit singles and doubles here, and some of the risk management opportunities may allow us to do that right now.
When we talk about just the opportunity in general, and I feel like we're going to talk about this a lot, we don't have July data coming, most likely. The further we go, the more and more likely it is that it's not going to happen. The uncertainty and the not knowing if we're growing. And I think about decent weather. There's been a lot of precipitation. Your area looks completely different. Iowa is in a better situation precipitation wise than it has been recently. How much speculation is just going to happen in the back end because we don't have any concrete data?
Yeah, there's certainly things moving in the direction that would suggest some expansion at some point. So rain has been important. The ability to get some forage supplies in reserve maybe is more likely than it looked a few months earlier. And so I think some of those does that trigger expansion? I will tell you, the first time I believe that markets feel like expansion is starting to happen, I know what's going to happen to cattle prices. Knowing when markets think expansion is clearly underway, I think that's what we don't know. And I look back to 2014, 2015 and feel a little remiss because I remember telling producers, hey, this is going to last for a while. Looks like it's a good period of time. Yet we had rebuild happen so quickly that it took a lot of shine out of those cattle prices fairly quickly. That could happen again. I think this time's different, but I just remind us it could happen again. I don't want folks caught not doing risk management, thinking that these prices are going to stay high for a longer period of time.
It definitely will give us something to talk about for a while. Let's talk weekly slaughter as we take a look at this last week. What did we see on the cattle and hog side?
Yeah, so USDA tells us for the week ending May 18th, the run of 598,000 head of cattle. That's down 24,000 head from last week, down 42,000 head from where we were a year ago. And on the hog side, a run of 2.404 million head this week. That's 25,000 head above what we did last week, but 3,000 head below where we were a year ago.
And as we take a look at those numbers, how are we running year over year?
Yeah, so down 4.5% on terms of cattle slaughter year to date. We're starting to get kind of locked in that down 4.5%. We'll see what happens here in the second half of this year. Hog slaughter, on the other hand, up 0.5% year to date.
Just a reminder for those who may be tuning in or we haven't been a viewer before, as we talk about why we monitor that year over year. What are we looking for? What are you trying to glean from that information? What does it tell you?
Yeah, I think in both cases, this really provides us a good indication of what meat supplies look like. What are we seeing too in terms of, so the data we get prior to slaughter, does the current slaughter data support the other data we were getting prior to that? Does it not support that data? Just getting a better idea of the flow of both cattle and hogs, and what's coming in front of us in terms of slaughter runs. You know, when we're down 4.5% in terms of cattle slaughter, it just reminds me when you think about population growth that's happening, we're that much lower in terms of per capita in front of us as well. So it gives us a good balance about just where these markets are from a overall supply and demand standpoint as well.
As we head into the only report this week, retail prices, as we take a look at that April data, let's start first with pork.
Yeah, on the pork side, the pork retail price, $4.81 a pound for April of 2024. That was a couple of cents above the March level, so not a big change. And in fact, when you look at some of the individual cuts here, boneless pork chops, they were actually down 2 cents. Boneless ham up 2 cents. Sliced bacon up 3 cents. We didn't get a lot of change in any of those components relative to where they were in March as well. When you look at the overall pork retail price for April of this year relative to April of a year ago, it's 1.8% higher. I still like to remind us when we get pre-COVID, the price we set at today of $4.81. We had $3.79 in April of 2019, Megan. That's just 27% higher today than where we were back in 2019.
And if we think that's a lot on the beef side of things.
That's right. You set the stage very well. The choice retail beef price for April of this year was $8.15 a pound. That was 3 cents higher. When you look at some of the components, we had ground beef up 10 cents, boneless sirloin steak up 13 cents. So we saw I think a little more increase in some of those individual beef prices. Now, two differences when you think about beef relative to pork retail prices. We're up 30 cents in that choice retail beef price April of this year relative to April of 2023. And when you compare it to 2019, so we're comparing $8.15 for this year versus $6.10 back in April of 2019. That's a near 34% increase over that 5-year period.
And not only that, you're talking about that at a time when inflation is up compared to where it might have been at that point.
That's correct. And again, I'll say from a consumer decision standpoint, we're talking about inflation slowing for meats in particular. And I think some of the headlines would have even suggested seasonally, we had some of these CPI for food products that were down month over month. Yet I'll just remind us, we're at a much higher level than we once were. So it shouldn't tell us consumers can't yet turn off the buying signal, just given that they're at these higher levels. It's just they're not continuing to grow at the rate that we would have seen just a couple of years ago.
All right, Scott, to wrap things up today, let's preview next week the trifecta, livestock slaughter, cattle on feed, and cold storage.
Yeah, so I think this is the cattle on feed and livestock slaughter for me are the most interesting pieces of this puzzle. And you and I have talked cattle on feed, so both placements as well as what we have on feed at the beginning of the month will be important pieces of the puzzle about what second half of 2024 slaughter might look like as we get later in 2024. Livestock slaughter for me, I mean, this becomes one where beef cow slaughter is much more important to this idea about whether we're expanding or not expanding and on the way to expansion. So I think that's going to be interesting to see what we get out of that beef cow slaughter information next week.
Well, there'll be plenty for us to talk about heading into that long holiday weekend.
I look forward to the trifecta next Friday.
2 out of horse race. Sure bets now, right?
That's right.
All right, Scott, great to see you. We'll talk to you again next Friday.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.